Today, we're breaking down a company that's sitting right at the heart of India's massive energy revolution. We're going to look past all the hype and try to figure out where the real, durable value is being created in this incredible transition.
Okay, think about it for a second. Every headline you see is about solar, wind farms, electric cars, right? Billions and billions of dollars are just pouring into generating clean power. But there's this huge, absolutely critical piece of the puzzle that almost everyone seems to forget.
Yep, the grid. You know, it's basically the circulatory system for our entire energy future. All that amazing green power is totally useless if you can't get it from point A to point B. Without a modern, tough-as-nails grid, the whole green revolution just grinds to a halt. And that's exactly where our story kicks off today.
So let's dive in. The company is Transformers and Rectifiers India Limited, or TRIL for short. Now, the name might sound a little old school, but to really grasp the opportunity here, we have to completely change how we think about them. We need a new mental model.
And this is that pivot. This is the whole game. TRIL isn't just selling you a metal box. They are selling execution certainty. They've transformed themselves into a platform that the biggest utilities and industrial players rely on to build and maintain the most critical, must-not-fail parts of the power grid. This shift from just a product to an indispensable platform, it changes everything.
So what does this platform actually build? Well, we're not talking about iPhones here. We're talking about the heavy-duty, mission-critical workhorses of a nation's infrastructure. The stuff you never see, but can't live without.
Look at this. These aren't just commodity parts. If one of these fails, a whole section of the economy can literally go dark. We're talking about the massive transformers that move power across states, the rectifiers that keep our metro trains running, the gear that connects huge solar farms to the national grid, and the equipment that fuels heavy industry like steel mills. It's the whole shebang.
Now, it's really important to get this. This isn't a story about a company riding some temporary economic upswing. No. TRIL's in being pulled forward by huge, multi-decade national projects. The demand we're seeing here is structural, not speculative.
Just look at this list. Every single one of these items is a massive national priority. India has to build the infrastructure to get renewable energy from the deserts and coasts to its cities. It has to electrify its railways. It has to build a reliable EV charging backbone. These aren't optional nice-to-haves. This is a national mandate. And TRIL is building the exact tools needed to get it done.
So, okay, they have the right products and powerful tailwinds. But you know what? A lot of companies do. Their real competitive advantage, their moat, isn't just their engineering. It's something much, much rarer. And honestly, it's the core of this whole investment thesis.
In this business, profits aren't lost on the factory floor. They're absolutely destroyed by bad contracts, by crazy cost overruns, and by late payments. The hardest thing to do, especially when everyone is chasing growth, is to maintain discipline, to just say no. And this right here is the heart of it. This is the secret sauce. While their competitors are out there chasing revenue at any cost, taking on these risky, low-margin projects that just poison their balance sheets, TRIL's real power is its willingness to walk away. That discipline, that restraint, that is its deepest moat.
Okay, so this philosophy of no sounds great in theory. But does it actually work? Does it show up in the numbers? Because, talk is cheap. Let's look at the actual evidence.
First, let's talk about how well they use their money. TRIL consistently delivers a return on capital employed of over 25%. Now, for a heavy industrial company, a number like that is, well, it's exceptional. It's the clearest sign you can get that they are only taking on projects that generate real, high-quality profits.
Next up, something I like to call the honesty test. In this industry, it is so easy to show big profits on paper that never ever turn into actual cash in the bank. But look at TRIL. Their cash flow from operations hugs their profit after tax. This is so critical. It means the profits are real. They're actually collecting the cash, not just booking imaginary numbers. And this just brilliantly illustrates their fortress balance sheet. A debt-to-equity ratio of around 0.6? That's roughly half the industry average. What does that give them? Resilience. Power. They don't have to take bad deals just to pay the bills. They have the power to choose.
Okay, any credible investment case has to stare the risks right in the face. To really understand why TRIL is strong, you first have to understand exactly how companies like this go bust. The danger here isn't some sudden market crash or a crazy new technology. The real risk is internal. It's a slow, quiet bleed. a death by 1,000 cuts caused by a loss of the very discipline that makes them so strong in the first place.
So you've got the usual suspects, right? Commodity prices are flying all over the place, which can crush your margins. Or you take on projects that are way too complex, or your customers just don't pay on time. But TRIL has built specific defenses for each one. They use cost pass-through clauses in contracts, they are incredibly selective about projects, and they focus on clients who actually pay their bills. It's blocking and tackling.
And this, right here, this is the death spiral. This is how it happens. It starts small, you start chasing bad, low-margin orders just to keep the factories busy. Then that starts to strain your cash flow. Soon, the gap between your paper profits and the actual cash you have gets wider and wider. And the final step? You take on a mountain of debt to plug the hole. These are the kill switches, the red flags to watch for. And right now, at TRIL, none of them are flashing.
All right, let's pull all of this together. We've looked at the business, the moat, the financials, and the risks. So what's the one big, clear investment idea here?
This is it. The whole story in a single sentence. You are not buying a cyclical manufacturer of parts. You are investing in an execution platform that is fundamentally woven into every critical piece of India's multi-decade energy build-out. It's that shift from being just another commodity supplier to becoming an indispensable partner.
And I mean, just look at this timeline. This isn't a 2-year story. This isn't a short-term trade. The build-out of the EV backbone, connecting renewables, electrifying the rail network, this is going to take decades. And beyond that, you've got the insane power needs of things like green hydrogen and data centers. The rebuild of the grid is truly just getting started.
So, after seeing all of this, from the operational discipline and the financial proof to these incredible long-term tailwinds, what is the ultimate takeaway?
So here's the bottom line. This company appears to be a necessary, non-negotiable part of India's entire growth story. As long as this management team maintains its famous discipline, then investing here isn't just a bet on a single company, it's a bet on the essential, foundational infrastructure that's going to power the entire nation's future. It's a case study in quiet, relentless compounding, driven by a structural trend that is, arguably, totally unavoidable.